Markets trading on the floor of the Nigerian Stock Exchange saw the all-share index closing at 36,088.64 points, down marginally. Now, this was as a result of losses in Guinness, WAPCO, Wando, Just Breweries and NACO. Now, while leading market gains were Total, Portland Paints, Dangote Sugar, Academy Press and EcoBank Transnational Incorporated. David Andori, General Manager at Lambert Trust and Investment, joins me now for more on market activity for today. Thank you so much, David, for joining us.
Always my pleasure. Thank you.
Now, of course, we do know that key market focus in the last week or so has been the MPC, the Monetary Policy Committee. We're going to have a decision taken tomorrow by the CBN's MPC. Now, for the market, what do you think is the biggest concern at this point?
Yeah, that may actually be ascribed to the situation in the market today as investors remain cautious in respect of the decision that will emanate after the MPC meeting tomorrow. A lot of people have the views that perhaps the Monetary Policy Committee may come up with further monetary tightening policy, as a result of which so many investors have decided to take cautious approach to investment, especially in the banking sector of the market. And so I would say, therefore, that as a result of the expectations from tomorrow's MPC meeting, investors are very, very cautious in the market. Secondly, a lot of stocks that had actually been experiencing rallies cooled down today. For instance, Just Brewery suffered a little decline today, technically signifying the end of the rally in that security. And also Unity Bank, that had been upbeat, which had been on bid for quite a while, also slowed down today. So those factors were sufficient to slow down the market today.
Now, David, although there are divergent views on the possibility of further tightening by the monetary authorities, now, if it goes in that direction, what do you think could be a likely implication for the market?
If the Monetary Policy Committee embarks on further tightening of monetary policy, it therefore means that more assets will migrate from the equities market to the debt market. Because that is likely to drive up interest rate in the economy. And so that will attract more investment into the fixed income sector. But however, there could be a little reprieve for the equities market, considering the fact that the American Feds decided not to proceed on their decision to halt further monetary easing. So if the Monetary Policy Committee in Nigeria tightens monetary policy, perhaps the decision of the Feds in the US to continue quantitative easing may counterbalance that domestic action. But however, it is actually doubtful if the MPC will further tighten monetary policy, considering the fact from what we hear, that the income from crude oil sales has actually increased recently. And so the basis for further tightening may actually be difficult to justify.
Now, David, we have heard that now that the U.S. Fed has decided to pull the brakes on any future or at least any immediate reduction in its quantitative easing, we hear that foreign investors in the market have relaxed a bit. So we might see perhaps an inflow of more cash coming into the market. Has there been any indication of such at the market?
Yes, because quite unlike last week when the market was persistently on decline and volumes, daily volumes were below 200 million units, today the volume traded was more than 250 million units, indicating therefore that in terms of volume we are having more activities in the market. And if that continues, is capable of reflecting on price movement in the market. And this volume movement may actually be as a result of increase in foreign investors' activities in the equities market.
David, the all-share index is a negative for the month and also for this second quarter. We're looking at a 0.16% decline so far. And of course, major indicators, indices in the market also in negative for the month. And we're looking at the all-share index also hanging just at the balance at the edge of 35,000 points. It's down today by about 0.28%. We don't know what the outcome will be tomorrow, but do you see a further slide in the all-share index?
Yes, the market has actually been reacting to a number of factors which drove it down in the recent past. Some of those factors are they actually relate to the quantitative easing in the US that investors thought may come to an end. And then more recently again, investors became jittery in respect of the outcome of the Monetary Policy Committee meeting here in Nigeria. So if those factors become positive in terms of the fact that we have already seen the situation in the US, that quantitative easing is continuing, and if the policy of the MPC in Nigeria does not end up tightening money supply, then definitely we would see an all-share index that is likely to stabilize at its point of dynamic equilibrium, which in the recent past had actually been between 36,000 and 37,000. Occasionally we may find some speculative activities like news driving up stocks like Unity Bank and Jos Breweries, and eventually those stocks are suffering some fatigue, along the line. But generally, it is expected that if macroeconomic policies domestically and internationally favor loose monetary policy, definitely the equities market will respond favorably. And that will be a loss to the debt market because more assets will then migrate from the fixed income market to the equities market.